Hello and welcome. My name is Noble. I'm here with another video to talk about what happened to the market on Friday and what's likely to happen going forward. So I have a daily chart of QQQ. It lost over 4% on Friday and it printed this negative candle, this large candle. In the process, it has closed below this uptrend line. If I bring in the moving averages, you can see that it fell below the daily 20 and 50 moving averages. The two averages were moving higher, but price fell below those two moving averages, which is not positive. So number of support levels were broken on Friday. Some might even call this a head and shoulder pattern. And what's interesting about this candle is that this one doesn't have a wick. Typically, when you have a candle which doesn't have a wick, you tend to see some follow through. So if we see additional weakness, what are some of the levels we should be looking out for? The first one is this uptrend line. You can see that there's been several interaction at this line. So this line is roughly around 300. So I've listed it right here. So the 300 is the first level. Additionally, if this level is breached, then this horizontal line comes into play. So you see this candle here, you've seen a couple of candles here, a few candles here, a number of candles interacted with this level. So this level is between 294 and 295. So those would be the near-term levels. We want to see whether or not bulls step in and support price at these levels. If 294 is breached, then obviously this level will come into play. A lot of people are calling for, after Friday's action, a retest of previous lows, the June lows right here, both in QQQ and SPY. I'm not sure about that, because when everybody expects certain things to happen, in reality something different may happen. And the other thing to note is that over the next couple of weeks we're gonna get a couple of important reports. The first one is the unemployment report, which comes out next Friday, 2nd September. As you know, the labor market has been very, very strong. Last month it added over 500,000 jobs. The wages have been going up at a rate of 5.2%. So market would be interested to see if there is any kind of softness in the labor market. Fed Chairman Powell continues to stress the fact that the labor market has been tight. There's been imbalance, meaning there are more job openings than people. So that would be an important report. If that report shows softening, then market may find support, but a strong report means continuation of weakness. A week after that, the CPI for the month of August is going to come out. That would be an important report also. In last month, the CPI fell from the previous month. So the reading last month was 8.5%. The expectation is that the inflation rate for August would be around 8.1. So if the number comes in around 8.1 or even below, that could also provide support to the market. But if on the other hand the report shows inflation ticking up or remains elevated, then we could continue to see weakness, because market would expect Federal Reserve to maintain a tight monetary policy. So those are the two important news events that can affect the market. So it's not clear cut that we're going to have a retest of the June lows. That may be the case, but it may not. It may very well make a higher low and then move higher. So that is to be seen. But for the moment, we're going to watch these two levels, the 294, 300, and see whether any kind of support or reversal happens at this level. Moving on to SPY, you'll see similar pattern a big red candle. SPY lost 3.38%. In the process, it fell below this uptrend. You might call it a head and shoulder pattern. The next area of interest is this level right here, this zone. This is 400. You also see an uptrend line which is interacting here. So this is 400 as in, on SPY. If this level is breached, then the next level, which is around 390, comes into play. You can see candle right here, right here, right here, and then number of candles interacted with this zone. So this would be an important level to 390. If these two levels are breached, then obviously you can conclude that the bears are still in control. Then that exposes some of the lows, set in June. But before that, we want to see whether or not price can find support either at 390 or 400. Again, the economic report that comes out, the jobs report and the CPI, is going to have an impact on what happens to SPY. The momentum indicators are weak. RSI has now fallen below the 50 level. If we look at IWM quickly, you see something similar. A new low, swing low, has been established. The next area of support is around 182, which brings it to this level. The momentum indicators are ticking lower. RSI made a new low, so momentum indicators are weak. If we look at other indices, let's start off with dollar. You can see that the dollar, which was weak immediately following Chairman Powell's comments, managed to recover and printed a bullish candle right here. This is a daily chart. The MACD is continuing to move higher. RSI is also above the 61.8 level. If we look at the weekly basis, we can see that the trend is solidly up. The moving averages, the weekly 20 period and the 50 period, are moving higher. One thing to note is that the gap between these two moving averages have started to widen. Now, typically, when they widen, there is a propensity to close that gap. So if I show you some examples, here you can see DXY was falling, the gap was widening, and then the price rose and then closed this gap. If I show you, even if we go before there, you can see the price was rising and the gap was widening, and then it went into a period of consolidation and some weakness, and that eventually closed the gap. So at the moment, this gap is widening. So at some point, we would expect a slowdown in the pace at which it's going up, so that these moving averages, the gap between them starts to narrow. The other thing to note is that the price DXY is now moving further away from the two moving averages. You can see that historically it tends to touch them. It hasn't touched the 20 EMA for some time. The last time was right here. So it is getting extended. One thing to note is that as price continues to rise, RSI has been making a lower high. If I look at the monthly chart quickly, since we are coming towards the month end, you can see that month end chart looks quite bullish. In fact, current month we have a big green candle. The previous month's high was 109.29. If current month's close is above 109.29, that would suggest that there might be further gains in coming months. Something to keep an eye on. The monthly moving averages are moving higher, but again, price has been going further away from these two moving averages. MACD is very strong, crossed the zero line, moving higher. RSI is also quite strong, moving higher, but RSI is coming to an overbought area. Last time when it reached this level, there was a period of consolidation to weakness. So something to keep an eye on is that it is becoming overbought on a monthly basis. Stochastic is also overbought, but otherwise it looks quite positive. I mean, you can understand why, because the rates have been going up, interest rates, and high interest rates tend to support strength in dollar. If we look at the rates market, so we'll start off with the 2-year. So the 2-year went up 3 ticks. It didn't have a bigger reaction than as we saw in the equities market. That's because the 2-year, which closed at 3.4, is close to the Fed's year-end target of 3.5 to 3.75%. That's why it hadn't reacted that much, because it's already close to where Federal Reserve Bank wants the interest rate to be. The 10-year, on the other hand, was flat. The 10-year is sort of pricing in a recession. In fact, the Federal Reserve officials have now openly started to talk about recession, although they expect mild recession. I mean, they said that they expect pain going forward. So the 10-year and the 30-year both are pricing in recession, and that's why we haven't seen, in fact, 30-year actually fell. So that's why we're not seeing a big spike in the on the higher end of the yield curve. If we look at the oil market, you see that oil has been struggling to overcome this 200-day moving average. There's also this 50-day exponential moving averages. They are kind of coinciding at this 95, 96 level. So this area is providing resistance at the moment. So we want to see whether or not it can get through there. If it's able to get through there, then this 104 level comes into play. MACD has started to move towards the 0 level. It's still below the 0 level, but if it's able to cross above the 0 level, that would show that the momentum is increasing. RSI is around the 50 level, so if it's able to move above that, that will show continuation of momentum. But we want to watch this 95-96 zone. If this zone is closed above, then 104 comes into play, and the support remains the low right here around 86, 87. If we look at VIX, so VIX obviously spiked. It rose over 17%. Now previously VIX had resistance at this level 24. It managed to close above this level. So the next area is this shaded zone. The top of the zone is around 2750-ish. So that would be the next level. MACD is now starting to move higher and heading towards the 0 line. So if it's able to go above the 0 line, that would show that the momentum continues to move higher. Last time when it crossed and moved above the 0 line, there was a big spike in VIX. Right here too, when it crossed above the 0 line, there was a big spike in VIX. So we're watching this level, to see whether or not it can close above the 0 line MACD. RSI is moving higher, made a new higher low. So the momentum is clearly showing that it's moving higher. That would suggest that we could see additional spike in VIX. Now, if we look at a few other sectors, S&P sectors, just to see what happened, the selling was broad-based. This is XLK on a daily basis. It broke below this level. It closed right at this support level. The next area is this 134. Momentum indicators are weak, so this looks like we could see additional weakness here. If we look at XLY, it broke this uptrend. Next area of support is this level around 158, 157.50, 158. Below that support would be around 148, this level. Financials also got hit hard, XLF, this one. So that too formed a new swing low. The next area of interest would be around 32.5 level. If we look at XLC, that is looking quite weak. There was this uptrend line, and that uptrend line was breached slightly. So this is where you have Meta and Google, and they're looking somewhat weak, and there is a possibility that we could see a retest of the June lows on this one. Even the defensive sectors weren't immune to the selling. This is the utilities sector, XLU. You can see XLU established a new swing low, and we're seeing the momentum indicators have started to move lower. This is XLP. XLP is another defensive sector, so that too had a big drop. Support level have been breached. Next level is this right here around 73. Even the healthcare, which generally people tend to move to, even healthcare has been coming under pressure. So that got affected as well. If we look at the biotech sector next, that too is showing weakness, new swing low. Now XBI, this is XBI. XBI traded in this range for a while and then broke to the upside. So it's now come to the top of this level. But given that the momentum indicators are weakening, it's entirely possible that we can breach this level, which is around 85. And that opens up the bottom of this range, which is around 80. So that would be the next area of support. If we look at the solar sector, which has been going up, that also came under pressure, but the technical picture is not as bad as the other ones. There is this support line, uptrend line, which is using closing prices, so it's still above that. So we want to see whether or not this level is breached. If this level is breached, then this support area is going to come into play, which is around 80. If we look at Bitcoin quickly, so you'll see that Bitcoin has been kind of trading in a range right now, and it's now heading towards the bottom of this range. So it's been stuck in this range for a long time. If you look at previous, so you see there was a decline here, and then there was consolidation, and then it broke to the downside. It then consolidated for a period of time, again broke to the downside. It's now again consolidating. So we need to see whether or not it can hold this level. This is an important level. So this would be, this is around 19,250. And obviously the resistance would be right here, which is around 25. If it's able to get through 25, then the chart pattern will start to look quite positive. But at the moment, it's quite weak. The momentum indicators are, but there is a divergence forming. You see the MACD has started to go up. So MACD fell. It formed a bottom here, and it's now just below the zero line. So if MACD can curl and start to move higher, that would be positive. RSI is not yet at this low. This was the low price previously. You can see both RSI and MACD are well above this level. So there is a positive divergence building as prices are tending to move lower back to the previous low. MACD and RSI are well above the previous lows, and stochastic is getting oversold right here. So it is possible that it could find some support here based on the fact that this pullback doesn't seem to be showing a lot of weakness in momentum. So that's all for today's update. We'll continue to watch the support levels we discussed on QSPY. We'll update you on a daily basis to where we are with respect to the moving averages. I hope to speak to you again in future videos. Thank you very much.